Okay, so this is the 2012 cash flow statements. So again, working from top to bottom, knowing your skeletons and so on, they're the key to these. So just before we get into doing the stuff from top to bottom, we're going to do our workings here. So first thing is buildings which cost 90,000 were disposed of for 13,000. So we received 13,000 for the buildings we sold. So we just need to make a note of that. And then buildings which cost 90,000 disposed of. So I'm going to go into my land and buildings and I'm going to change that 780. I'm going to change that to, so that's land and buildings from last year. So 2010. I'm going to change it from 780 down to 690. I'm taking 90,000 away from them. Now I would do that on the, again, I'll just say this again, I would do this on the question. All right. Now, and normally, and some of the more recent ones, it would have told us the depreciation as well. It hasn't done that yet. It might, somewhere else in the workings, it may or may not do that, and we're going to come back to that. So there was no disposal of machinery during the year. That means that the depreciation on machinery is just the difference between the two numbers. The purchase of machinery is just the difference between those two numbers. So don't have to do anything with that. The quoted investment yielded a fixed return of 5% per annum. So that's going to be our investment income. That's going to be 5% of investments, 60,000. You have them for a full year. There was no change in them. So 5% of 60,000 is 3,000. So we'll just make a note of that. The dividend for the year was 5 cents. So dividends paid, we're going to go 5%. It's always of the most recent one, I suppose. So 5% of 800,000, which will be 40,000. Okay, so that's that one done. Now, depreciation charge for the year arriving at operating profit included 12,000 on buildings. So that's giving you a clue as to how to do this, right? To how to work out what the depreciation on the buildings were. That's going to be important. So last year was 110,000. Okay, and this year's is 120. So if there was no disposal on buildings, this 110 here should have gone up to 122. I hope you follow with that. So last year's accumulated depreciation 110, then there's a charge on depreciation of 12, which brings you up to 122. But this year's figure is only 120,000. So that means we must have disposed of 2,000 euros of depreciation when we sold the buildings. So the depreciation on the building sold was 2,000. So now just make a note of that. If we go back up here, we know that the building it costs 90,000. So the building's value, just bear with me on this, the building's value is 90,000 minus 2,000, which is 88,000. And where all this is getting to is that at some stage we're going to need to know how much we got for the buildings when we do the receipt from the sale of fixed assets. If we made a 13,000 euro profit on a building that was worth 88,000, we received receipt from the sale of the building has to be 88,000 plus 13,000, which is going to be 101,000. So its value is 88,000. You made a profit of 13,000, which means you received 101,000. So that's all sort of a long-winded way of doing that. So if you wanted to know, you you can go back and change this 110 down to 108 because the depreciation that we know on the building we sold is was 2000. You don't really have to. You're not going to need that number anymore. Um, Corporation tax due on the 31st of the 12th, 2010 was paid. Now, what does that mean? So that means just everything you owed in corporation tax from last year was the only thing that we paid this year. So that's last year's tax bill of 45,000. That means this year's tax year bill has to be what you owe. Okay, it has to be 110,000. Because if you owed 45,000 last year and you paid it all off, and then you still owe 110,000 and you've paid none of this year's bill, well then the 110,000 must be this year's tax bill. Um, and that's that done. So we now have enough information to answer the entire question. It's only about slotting in the numbers as we go. So again, always starting at the bottom of the abridged profit and loss account. Um, so you start off at 196 because that's this year's profit. You had last year's profit was 31,000, which means you must have made a profit this year. Your retained profit must have been the difference between the two of them, which is 165,000. The dividends for the year, well, we worked that out, it was 40,000. So some number minus 40,000 is 165, so that's 205,000. The taxation, that was the thing we just did there. So the taxation bill for the year is 110,000. So some number minus 110 is 205, so that's it'll be what, 315. The debenture interest, I know I worked that out as well. I haven't. Okay, so have I enough information to work out the debenture interest? I do there. So it says 10% debentures, 50,000 redeemed on the 31st of the 12th, 2011. So what does that mean? So that means you have 10% of 200,000 up until you redeem them. Redeemed means paid back. So you see they were 250. Sorry, it's 10% of 250 up until you paid them back. So you had 250,000. What date did you pay them all back on? You paid them back at the end of 2011. So you actually have the 250,000 for the full year. So that's by 12 12s. If, for instance, you redeem them on the 30th of the 6th, you would have 10% of 250,000 by 6 12s, 10% of 200,000 by 6 12s, and you'd add the two together. But we've 250,000 by 12 12s, 200,000 by 0 12s in reality. So that's 25,000. So that 25,000 is going in there. Was there investment interest? They gave us 5% return on this, so we worked out the investment interest to be 3,000. So then we've got what number? Plus 3 minus 25 is 315. So add on the 25 and take away the 3. It gives you 337. And that becomes your starting figure for your operating profit. Okay. Now, your depreciation charge for the year. Two numbers. It's the depreciation on the buildings and the depreciation on the machinery. Now we know the depreciation on the buildings is 12,000. So if you wanted, you would have changed that 110 down to 108. 108 up to 120 is the 12,000. It's just that number there. So that's that. 12,000, then the depreciation on the machinery. We haven't sold any machinery, so it's just the difference between the 165 and the 225. Don't get confused about the other numbers, they're just totals. So it's quite badly laid out there. I don't really know why they have it done that way, but it's the difference between 165 and 225, which is 60,000. So the total depreciation charge for the year, which of course we're adding on as a non-cash expense, is 72,000. Okay, remember we're adding back non-cash expenses, we're taking away non-cash gains. Was there any goodwill? There was none. Was there a profit on the sale of the building? So there was a profit on the sale of the building. It was disposed at at a profit of 13,000. So we didn't have to work that out because it was given to us. Now remember, profits are non-cash gains. So we'll take them away. So they increase our profit, but they don't actually increase our cash. So if we're looking to work out what our cash is, we have to take those into account. Bad debt provision, there was none. So there is no change in bad debt provision. What about a change in stock? So stock has gone down. So a decrease in stock, remember, increases our cash. So they're always the exact opposite. So the stock has gone from 135 to 111. So that's 24,000. So decrease in stock is an increase in cash. We've sold stock, so we've gotten cash in. Debtors. Debtors have gone from 180 up to 380. So that's an increase in debtors. And that's the opposite, okay? So an increase in debtors is a minus. So we've sold an extra 200,000 euros worth of goods, but they're all on credit. So that impacts our cash in a negative way. So that 200,000 brings our cash down. Creditors have gone up. So an increase in creditors is an increase in cash. So we bought more goods, but we didn't have to pay for them. So as creditors go down, you pay them off. As creditors go up, your cash position improves. So an increase in creditors of, what would that be, 14,000 will increase your cash by 14,000. So the only one, once you know stock, the other one should just fall in. So decrease in stock, it should make sense that if stock goes down, well then cash goes up. Well, that means that debtors has to follow the same rules. So they're both assets, so they have to follow the same rules. Trade creditors are liability, so it has to be the opposite to the asset rules. So an increase in creditors is an increase in cash. So just total them off, and you've 234,000. And that is our net cash inflow from operating activities, which is our starting number over here. 234. Okay, so as always, you get marks for your headings, so make sure you know them. You make sure you know what goes on each one. And there's a fairly straightforward process to follow in these. So certainly for investment income, debentures, and tax and dividends, we follow the rules that we take last year's balance, or the balance at the start of the year. That's from the balance sheet. And it'll be from the assets or the current assets or current liabilities. We add on the charge for this year. And that, of course, comes from the profit and loss account, so Part A. And then we take away whatever's left over at the end of the year. So we take away the balance from this year. So the balance from this year's balance sheet. And that'll give us what we've paid. So if we always follow that process, what do we owe, or what were we owed at the start of the year? What did we pay off during the year? And then what's left, or sorry, what did we earn during the year, or were billed during the year, and then what's left at the end of the year. And if you add the first two and take away the third, you will get what you've paid. So let's start with our investment income. There's an investment income of 2,000 at the start of the year. So that's our balance at the start of the year. We earned investment of 3,000. Remember, it was 5% of the 60,000. So we earned 3,000. So if we got everything we were supposed to get, we should have got 2,000 last year. We've got 3,000, or We're supposed to get 3,000 this year. So if we got everything in, we would have gotten 5,000. But there is investment income due at the end of the year of 3,000 that we haven't received. So we take that away. And then you get 2,000 plus 3,000 minus 3,000 gives you 2,000. So the amount you've actually received is 2,000. The amount you receive increase your cash, so they're pluses. Next one is a debenture interest. We do that in the same way. Get into your liabilities. We owed 15,000 at the start of the year interest. We were charged interest this year. We worked it out there. We were charged 25,000. So we owed 15,000 at the start of the year. We were charged another 25,000. That brings you up to 40. At the end of the year, we still owe 10,000, which means we must have paid 30,000. So last year's plus the charge minus this year's gives you a payment of 30,000. So minus 30,000 there. Okay, and that will give you minus 28 as a total of those. Next one then, taxation paid. Same process. That's your corporation tax. Last year's balance is 45,000. We were charged, if you remember, if 65,000 it should be. Where is it? No, we were charged 110,000 this year. And we owe at the end of the year 110,000, which will give you 45,000. Now, there's a easy enough other way around that. It tells us actually in the question we paid corporation tax due on the 31st of the 12th was paid in full. So we paid that 45,000. That's all we paid. So that's the number that goes in. Remember, we've paid it, so it reduces. So minus 45. Now, the receipt from the sale of the fixed asset. That was my big working. I think the answer was 101,000. So remember, we worked out that we got 88,000, or we made a profit of 13,000 on an asset that had cost 90,000, but had 2,000 depreciation on it. So 88,000 was the value plus 13. So we received 101,000 for it. So that's a plus. Did we buy any fixed assets? We definitely did. Fixed assets, remember, have gone 780 minus 90 is 690. And then we must have bought a building costing 690 plus, what would it be, 160 for the building. So I'm going to put in 160 there, payment required. I'm going to just say building rather than fixed asset. And then look at our other one. Our machinery has gone from 230 up to 349. So that's another that is another, what's that, 230, another 119. So payment to acquire machinery. 119. You could put the two dots together, 279, that'd be fine. They're both minuses, of course, they're payments, so it reduces your cash balance. So overall, with your assets, you've spent 178,000 this year. Your dividends then, so we go back to our rules on so we go back to our rules for ones that are included in current assets and current liabilities. So dividends start off, but there's no mention of dividends being owed. So it's 0 there and 0 there. So our dividend charge for the year from Part A was 40,000. So that's what we've paid. So if you owed nothing at the start of the year, you're charged 40,000 and you owe nothing at the end of the year, well then 0 plus 40 minus 0 is 40,000. So our dividends paid is 40,000. Again, that's a minus. Payments are minuses. So do that sum to see if we have a net cash inflow or outflow from operating activities. and it's minus 57,000 there. So minus 57,000 means it's a net cash outflow. So 57,000 has left our business in cash as a result of everything we've done on a day-to-day basis. Government securities, they've gone from zero last year up to 60,000. There, we in effect are lending the government money. So we have paid 60,000 to buy government bonds. So that's a minus. Debentures. Well, we know we've repaid debentures. We repaid 50,000. So if we repay debentures, that's a minus. We pay back a loan, remembering that a debenture is a loan. Share capital can really only go up. So 600,000 up to 800,000. We've sold 200,000 of the shares in our business, and we've gone from a share premium of 100 up to 120. So that's another plus 20,000. So our overall position, go from net cash inflow down to the bottom, is an increase in cash of 53,000. It's a plus, therefore it's an increase. And of course you can check that that's right. I hope it's right by looking at our bank and our cash positions. So there is no bank in this. So, sorry, there's no cash in this. There's only bank. So bank has gone from 22 up to 75, which is an increase in 53. So that's our 53 there. Our reconciliation of net cash to movement in net debt. So that looks at what's happened to our debt position as a result of all of the changes to our cash. So again, you finish with our last figure, our increase in cash is 53,000. Any debt that we've lent out is a plus, any debt that we've taken on is a minus. So the only debt that we can lend out really that's a plus is government securities. So we've lent out 60,000 euros, so that's a plus 60,000 euros. We've also, let's look at our debentures. Our debentures have gone down by 50,000, so we have 50,000 less debt. So that's another plus for us there. So our overall position is our change in debt is a positive of 163,000. That means that we have in effect 163,000 less debt than we had the previous year. So we can check that that's right by comparing our net debt from last year to our net debt from this year. So I'll just do a little working here. So I'm going to use net debt from this year first, 31st of the 12th and 1st of the 1st. So net debt is made up of cash, bank or bank overdraft. I'll put them in separately just to show this. So bank overdraft, cash, bank, government securities. And then they're my positives. So those three are my positives, right? So my negatives then are bank overdraft if I have one, and debentures. They're my negatives. So if we look at all those, this question, there is no cash, so we can put in 0. There's no money in the bank, right there. So there, the banks are positives. So the bank is 75,000 this year and 22,000 last year. So the bank owes us that money. We've put that money into the bank, so that's a positive for us. Government securities are 60,000 at the end of the year, and they were 0 last year. So the government owes us 60,000 this year. Bank overdraft would be in liabilities. There was none. You can only ever have one. You can't have a bank and a bank overdraft at the same time. You could one year have bank and another year have overdraft. That happens a bit. And then our debentures. So this year is 200,000. Last year is 250. Again, they're minuses. So debentures and bank overdrafts are minuses. Cash, bank, and government securities are pluses when it comes to net debt. So that is minus 65,000 this year and minus 228 last year. So if we put in the net debt from last year there as minus 228, And then we go 163 minus 228. That'll give you minus 65,000, which is the same answer as that. You will always get theory in these, quite a chunk of theory, because you can see they're quite quick to do. So the theory, they're nearly always around cash flow forecasts, and there will always be around the same sort of questions around non-cash items or the reasons why cash flow forecasts are prepared. So this question, explain why earning profit does not result in a corresponding increase in cash. Use figures from the question to support your answer. So profit uh, includes the payment of some expenses which are non-cash expenses, or the earnings of some profits which are non-cash earnings. So they will change profit without changing your cash balance. So an example of that is depreciation. So depreciation in this question, where they tell us these figures, we know depreciation is 72,000. Really what you want to look at is part B of this question here. So depreciation is 72,000. So depreciation reduced our profit by 72,000 without reducing our cash by a penny. Another one would be the profit on the sale of buildings increased our profit by 13,000 without increasing our cash. Other ones you could use. What does it say? Sorry, I just got the wording of the question right. Explain why earning profit. They're fine for those. Another one might be goods could be purchased for cash and sold on credit. So your sales will increase, so your profit will increase, but your cash has decreased in that scenario until you get the money back from receiving it. So they're fine. The responsibilities of the directors to comply with company law, to prepare reports for the shareholders at the AGM, directors' reports, auditors' reports, and financial statements, to sign the financial statements, to select suitable accounting practices, to prepare the annual accounts of the business, and to appoint auditors. We'll look at them in a bit more detail at some other stage. So hopefully that's of some use to you. This one is slightly different than the two more modern ones, that the buildings and the profit on the sale of buildings is different. So it is important we know how to do all those. All right, hopefully that's useful to you.